Looking ahead to the trading week beginning Monday, December 6th, quite a bit is going on next week that really has to do with yields. First, let's talk about the way that sort of mixed non-farm payrolls number affected the markets. The Dow, we have the third consecutive down week for that particular index, second consecutive down week for the S&P, and now down 3 of the last 4. Same thing with the NASDAQ, second consecutive down week and down 3 of the last 4. And the Russell 2000 had its fourth consecutive down week, and that's the longest streak since the start of the pandemic in February 2020. So as we look at the week that's coming up, we have to know that yields are squarely in focus. The way the week ended and the way the week progressed last week, we saw short end yields rise and stay up, but the belly of the curve and the long end of the curve fell after that non-farm payrolls number. The 2-year note fell about 3 basis points by Friday's close, but the 30-year fell about 7 basis points, and the 5-year note fell about 8 basis points. So we're seeing that. Also, the 10-year note fell about 8 basis points. So we're seeing that flattening of the yield curve going into next week, and we want to see if that's bringing about more talk of stagflation, because the economic data hasn't been bad. The inflation data has been moderating, but not enough. We saw Jerome Powell take that transitory word and retire it. So we're going to need to see how yields are going to affect the market. It seems to be that they're putting a little pressure on the market as of right now. Again, if they continue to progress like this, where you're seeing higher short end rates, but really growth be priced out of the market in the 10-year through 30-year sector, that's stagflation. That could be trouble for equities. Geopolitics is actually going to be in focus as well, as Russia has amassed more than 94,000 troops near the Ukraine's border and may be gearing up for a large-scale military offensive at the end of January, according to Ukraine's defense minister, Oleksiy Reznikov. He told Parliament that, citing intelligence reports. We don't know if it's actually the case, and we don't know if it's going to be affecting the markets. But now that a government shutdown is out of the picture, this would be the next challenge for this particular administration if something like that were going to happen. So we're going to keep an eye on that. Now, in terms of data, Monday we get UK November construction PMI and November BRC retail sales. And then we get the November balance of trade figures out of China that evening. Now on Tuesday, EU third estimate of the third quarter GDP. Also ZEW economic indexes for December for the EU and Germany, and in the US and Canada, we get October balance of trade figures. Wednesday the 8th, Bank of Canada has a rate decision, and then that evening we get Chinese PPI and consumer inflation data for November. Thursday the 9th, more balance of trade figures, this time out of Germany, along with weekly earnings out of Canada and the average weekly earnings, and then U.S. wholesale inventories for October, and of course, weekly jobless claims. And then Friday the 10th, biggest data day of the week. We start with the inflation rate for November in Germany. This is the final reading of that particular data set. Then we get October year over year and 3-month GDP average in the UK, along with our October balance of trade. And then October construction input and industrial production. And then later in the morning, we got U.S. inflation data for November and preliminary Michigan consumer sentiment data, along with their inflation readings for the month of December.